Good morning and welcome to Opening Bell here, live streaming from Moneycontrol. I'm Stacey Pereira and I'm here to take you through the news and cues that could impact your trading day. So let's not waste any more time. Let's get started. And seems like after that rally of 3 sessions, the Indian markets may perhaps pause for a breather, even though they are headed towards those record high levels. Now, the rally was definitely led by those blue chip stocks. But we also saw the bank Nifty, which really scaled to those record highs, 44,000 and above. Now, the index has, in fact, gained about 12% in the last 2 months. And for those global markets, in fact, investors on Wall Street will return after that long weekend, but on positive cues. Now, the Dow Jones futures were trading in the green, whereas if you look at the Asian markets, those were trading mixed, but anticipating what would be the outcome of that debt ceiling deal. Now, we did see the Japan's Nikkei, which was trading in the red, while the others were somewhere oscillating between the green and red. But it is good news for India, because India has reclaimed that 5th position as the world's 5th largest stock market, with the market capitalization of over $3.31 trillion. Now, they are overtaking France. And as for the fund flows in the trading day yesterday, we did see the FIIs, which are continuing to be net buyers, lapping up shares close to 1,758.16 crore rupees, whereas DIIs too continuing that momentum in their buys in the Indian equities. So let's get going and discuss strategies as well as stocks and which ones will perhaps be in the spotlight today. We have Sudeep Shah from SBI Securities who's joining me. Sudeep, thank you so much for speaking to us here at Moneycontrol and waking up in the morning to give our viewers what they can anticipate in today's trading day. Now, we are seeing the markets which have extended gains for 3 consecutive sessions, Nifty 50 climbing those highest record levels in this calendar year, if you have to say so. Where are you seeing those support levels? We are looking at 18,580. It could also, in fact, if it advances 18,600, the SGX Nifty is suggesting an 18,700 above open today. So where are you looking at these numbers? What are your levels that you're tracking?
Good morning, Stacey. Now, see, it has been a very good ride in the last 3-4 days. Now, if we see scaling 18,300, which was a prior resistance, then 18,500, and now we've closed about 18,600. So a lot of resistances are being crossed. And what's important is that along with Bank Nifty, it has been IT. Now in the last few days, some metal stocks also have participated. So it's like an all-round rally. It's not just concentrated into a few pockets. So that is much better. The health of the rally is much better than what was in case of the previous moves to 18,300, 18,700 in the last year. So now what we feel is that from the current levels also, the markets are not too heavy like was in case earlier. So now from here on, 18,400, 18,450 positionally will act as an important support on spot Nifty, and we might even cross the all-time highs above 18,800. So this is the positional view. But from an intraday perspective, from today's strategy perspective, I feel any dip to 18,530, 18,550 on spot Nifty could be a very good buying zone, because what we've seen yesterday is that post that close around 18,600 yesterday, a lot of in the money put writing was witnessed in 18,600 as well as 18,500. So that means that at lower levels around 18,530, 550, there would be a good support in Nifty. And on the higher end today, 18,680 to 18,700 will act as a resistance, because the 18,700 is the strike where there is some serious call writing which is happening. So from a weekly perspective, from a couple of days perspective, I feel 18,500 to 18,700, 730 could be the range. But as we say, the markets are really strange in the last few days. That a lot of resistances are being crossed. So it might be that even this one gets crossed easily. But all in all, the gist would be to be a buyer on dips and to buy good quality stocks which are participating in the rally.
You literally stole the words, because that's what I was going to ask you right now, because the market remains in that defined range with that bullish undertone, you would say. But would it be prudent to take advantage of these dips at this point and, take profits on the higher levels? How would you look at this?
See, it would in any case, see, if the rally is there, it's materializing. A lot of stocks and sectors are participating. So it would be wise enough to enter into good quality stocks rather than getting into any shady companies or stocks which are just continuously falling down in these kind of markets. So what we have to look out as a trader, as a investor, is to participate in stocks which are not only outperforming their own sectorial indices, but they are even outperforming the Nifty by and large. So even in these kind of markets, there are a lot of opportunities. Case in point, Titan, Axis Bank from Bank Nifty. Now a lot of other mid caps are moving. So specifically, we will have to we'll have to pick and choose good quality companies which could hold out even in case there is a small 150 200 point correction on Nifty. So that is why I am emphasizing that we should be picking up outperformers.
Right, so outperformers, but if you look at the sectoral indices, barring IT and oil and gas, now we have seen most of them rally as well in this momentum. So other than those outperformers, any specific stocks that you would like to recommend that our viewers should look at, especially at this time, and what should be the factors that they should be watching out for when they're doing this nitpicking?
See, now if we see Titan, now case in point is Titan, which is my pick for today also. Now what is happening with Titan is that Titan with yesterday's move, last few days there it was a consolidation, and post that yesterday it was a breakout out of that consolidation. And with that, what Titan has done is it has even crossed and closed above the October 2022 highs, which was when Nifty had hit 18,800. So now, if we just compare with Nifty, the Titan is more stronger than it's sustaining above its previous swing highs also, the all-time highs. So I feel such stocks should be lapped up, and these stocks are not only technically good, but they have been giving good results, good updates fundamentally also. So that is the reason I feel that this stock could be bought with a 2780 stop loss, and upside up to 2900, 2920 can be witnessed in Titan from a short-term perspective. Now, another stock is Axis Bank. While we had seen that last move in Bank Nifty to 44,000, and then there was a correction of 1,500 points. Now, the one stock which has stood out and which has gained straight away in that entire up cycle and down cycle was Axis Bank. And Axis Bank not only has crossed its previous swing highs, but it is now trading at almost 4-month high at around 930. It is sustaining above all its moving averages, broken out of a consolidation, and I feel from current levels it is apt to go up to 960, 970. One can buy it at current levels and on dips with 905 stop loss.
Right, so those two picks coming in from Sudeep there. He's looking at Titan as well as Axis Bank. Both of those counters definitely something that you should be watching out for. But also other stocks that we'll be focusing on today. One will definitely be Reliance Industries. Now it's seen quite a bit of lap up, especially among when we are seeing this good rally. That is something that has also aided the rally, one would say. But Reliance Industries today will be in focus because this is coming on the back of news that Jio Cinemas has entered into a multi-year partnership with NBC Universal to offer films as well as a TV series in India. This is on its OTT platform. So Jio Cinemas, remember, this is coming at the back of another deal that they had done with Warner Brothers recently. So Reliance will be a counter to be watching out for. But that's the market opening bell for you. As you can see on your screens, a little bit of red there, like we had anticipated, because we saw that rally coming in, but the SGX Nifty was predicting or indicating that marginally lower opening, and that's what you're seeing there. Barely 0.13% down there, 0.14 the Sensex as well. Bank Nifty also seeing that little bit of pressure, but was anticipated because there will be some kind of consolidation. The broader indices, though, they're mid-cap comfortably in the green, kind of changing, oscillating, one would say, between that, but still some bit of relief. The small cap also there showing a bit of green there on your screen. So the broader indices, kind of reversing that trend, whereas the bigger your main indices, the benchmarks getting into the red zone. If you look at the sectoral front, there your FMCG index is in the green. Let's look at the metal pact and how that one is doing. IT also, for that matter, in the green. So those are a couple of components which we knew will actually go well for the Nifty as well. Metals there succumbing to pressure. The Nifty metal index definitely in the red, just like how the benchmarks were. Let's look at realty index now. That one, in fact, has seen quite a big rally in this whole year. If you look at it on the this year alone, in the 5 months, it has gained about 8%. So that is something that you could consider. Look at the capital goods, that indices also in the green. So if you look at it, I think there are mixed signals there. A couple of IT stocks are trading in the red, even though the indices is in the green. Let's look at also the top gainers on your screens in a bit. We can look at which are those stocks that are actually trying to hold out compared to even what we are seeing the benchmarks really do. So that is on your screens, the gainers: HCL Tech, QPL, Adani Ports. Now Adani Ports is the one that is going to be reporting its Q4 numbers today, so it is comfortably in the green, though we'll have to see what those results really tell us. Whereas you have Bajaj Auto, Kotak Mahindra Bank, as well as ONGC. Now that counter really reversing all of those losses that it saw yesterday, because that was one of the top losers in trade yesterday, definitely reacting to its results, but today now in the green. Grasim's Titan, like how Sudeep was pointing out, is something that you should be looking out for. They're comfortably in the green. Even Power Grid, all of them in your top Nifty gainers. And look at the losers. ITC, that's leading the losers back. Hindalco as well. Apollo Hospitals at another counter, which is going to be declaring its results, and which is why perhaps succumbing to pressure. JSW Steel as well as SBI. Now SBI, it's quite surprising to see it here coming under pressure, because it was the banking pack really yesterday which was pushing the bank Nifty. Also all of that ICICI, SBI, Kotak Mahindra, when you can see Kotak in the green, SBI surprisingly there succumbing to pressure. So well, we'll have to see how all of these counters are really going to take it in. But let's get back to other stocks which would really, make a difference in trade today. And like I was mentioning, Reliance is going to be one of those in focus. Now, why will Reliance be in focus? That's because I was talking about the deal which they've signed with UBS and Universal. This is for their OTT platform. Now, the deal will definitely give Jio Cinemas that premium subscriber access, as well as to most of your popular shows. And we just recently also saw how they were negotiating and then got Warner Brothers. They also got, after Hotstar took off HBO, it was Jio Cinemas that really took that stride to get more. So that is going to be a counter comfortably in the red today as well. So something that investors can be looking at. Another important counter today will be that of NBCC. This will be in focus because this too reported its Q4 results yesterday, and it saw its profits zooming 206% on a YOY basis, with profits coming in at 108 crores. Healthy operating performance, one could say. Now, the public sector enterprise has the growth has mostly been driven by that healthy operating performance. Consolidated revenues too coming from the operation stood at 2,790 crores, increasing by about 14% on a year-on-year basis. Another stock that we'll be looking at is RIL Vikas Nigam. Now, that the state-owned railway company has recorded a 5-year year-on-year consolidated profits, which has come in at 359. That counter, though, down in trade right now. So all of this is something that the markets are really looking at where to put in their money. And let me bring in Sudeep once again to tell us where exactly we should be looking at. If these are some of the stocks that are buzzing today in trade. We have earnings which are kind of at the fag end for this quarter. But Sudeep, among these blue chips, at least the banking stocks, we're seeing Bank Nifty also do quite a bit of the stride with record scaling to those records. Would you suggest anything in this in the banking names, be it private or public banks?
Yes, TCC, within the banking names, what we are seeing is, as we already discussed about Axis Bank, now there is one more stock which I feel is about to move up, and it has already broken above its swing highs. Now that is IDFC First Bank. Steadily after the results, in the beginning of the month, the stock has quietly rallied from 63 to 70 levels without any major hiccups. And while the Bank Nifty was shaky in between in the early part of the May month, this stock has steadily climbed to 70, and now it's at multi-year breakout levels. So I feel that from the current levels, yeah, IDFC First Bank has a long way to go. Technically, it is the setup is absolutely fine on the daily, weekly, and monthly charts. And if we see the fundamentals also, they are in place. So I feel it's a combination of both. It's kind of a techno funda pick, and from the current levels, this stock can be bought with a 66 stop loss and a 80-85 level target from the next 1 month perspective.
Right. So other than Axis Bank, Sudeep is also suggesting IDFC First. That is something that you can look out for. But in other stocks that we also saw making some buzz was IRCTC. Now, IRCTC too declared its results yesterday, and it saw its net profit zoom almost 30% on a YOY basis, coming in at 279 crore. The company's revenue from operations, in fact, have also increased by 39% at 965 crore. That is a counter that you can be looking out for, whether it's the right time to be entering, because over time it has given some good returns, although it is looking at some, coming under pressure right now. It has seen some bit of this. What was interesting is that the IRCTC's board also recommended that final dividend of about 2 rupees per equity share of face value of 2 rupees each for this financial year, and that is something that a lot of its investors and shareholders were looking forward to. So counter not doing so well today, but otherwise if you look at it as an investment, it is something that has caught a lot of attention. Another one that we will be looking out for is Sobha Developers. Now, this South-based real estate company has in fact reported a massive 242% year-on-year growth in its consolidated profit, which is coming at a 48.6 crore for this quarter, and this despite that weak operating margins which are driven by that healthy top line. But the revenue from operations in fact have surged to about 70%, coming in at 1,210 crores. This compared to the corresponding period last year, which consistently higher sales is which has really driven that, and even the highest ever collection they have seen in terms of the healthy customer deliveries that they've managed to put out. Now, the board has also recommended the dividend of 3 rupees per share for FY23 when it comes to Sobha Developers. Well, those are some of the counters. Let's look at what this first initial 5 minutes has done for trade. Those counters back on your screen. The Nifty 50 still there in the red, trying to hold some ground, but in the green. Sorry, they're out, but just 0.2%. So not much you can say. But like we were anticipating, there is going to be some consolidation that we are expecting to see in the markets, and those were those levels that we had said. But 18,600 is where it is. The Sensex also managing to inch a little bit higher. Bank Nifty also now inching higher. So we can see that initial gap down that we saw, that is really picking up now, and that momentum hopefully might continue. But the market seeing that bit of oscillation, one could say, between the red and the green, but now comfortably in the green there. The Nifty, Sensex as well as Bank Nifty, those bigger counters which were all in that rally mode up until yesterday, are now back. After that initial bit of red is back in the green. Well, but before we let you go, we also have some big corporate voices that we would like our viewers to listen into. Now, M&M, that was one of your top gainers in trade yesterday, and it did come up with a strong Q4 number as well as showed out a robust order book. Now, our network channel caught up with Rajesh Jujurika, the Executive Director as well as Chief Executive Officer of the auto and farm sectors at Mahindra & Mahindra, and spoke to him about the quarter gone by as well as his outlook for the year ahead. Listen in to what he had to say.
We expect the SUV industry as an industry to grow a little over 10% in F24, and we would, I'm sure, gain market share in the year. We are ramping up our capacity. We've already reached a capacity of 39,000 per month. I think when you hear the industry growth numbers from other peers in the industry, they talk about everything, including passenger vehicles. Since we don't play in the overall passenger vehicle space, we play in SUVs, which is now 50% of the passenger vehicle space. We expect that industry to grow at about 10%, and we would expect to do better than that.
Well, so that is the word from Mahindra Mandra, the counter being a top gainer too, seeing some pressure. But the top loser yesterday was ONGC, and we saw that one get into the gainers list today. And that one was also reacting to its Q4 results. Our sister network spoke with Pankaj Kumar, the director of production at ONGC. Listen into what he had to say.
As far as crude and gas production is concerned, the crude production vis-a-vis 21-22, the decline has been stopped. This year's crude production, I won't say was up with respect to 21-22. It's hardly 0.2% or something. But gas was, yes, little less. But rate of decline of gas in last 2-3 years, we have again been able to arrest that. This year it was, I think, declined by minus 1 point something percentage. So overall, we could arrest the decline. The coming year, definitely, we expect to increase our oil and gas production. We are going to add crude oil from KG block this year, somewhere in Q3. And at the same time, we have taken measures with respect to the very strong reservoir management as well as reduction in operational losses, increase in efficiency, and we expect to increase crude oil production where we are. This year's crude oil production was around 19.5 odd million tons. We expect it to take it to 21.2 or 21.3 million tons in the year to come. That is 23-24. Similarly, the gas production this year has been little over 20 BCM. There also we want to add almost a couple of billions more.
Well, so those were some of those big corporate voices that we have with us, and I hope they've given you a clearer picture of what you should be looking out for. We also would like to thank Sudeep Shah, who joined us to give you all those analysis in terms of the strategies you should be looking at and also stocks that you could be looking at. But with all of us here putting this show together, this is a wrap on Opening Bell. Thank you so much for watching, and please do post your comments as well as feedback in the comments section, and follow our link at the bottom of your screen and tell us how you'd like us to change. And for updates like this, tune in to Moneycontrol as well as the Moneycontrol app.